do me a favor. I know y'all being kind of shy, not coming on video here with me. So put in the chat box where you're from and what your favorite food is for Thanksgiving. Since this is Thanksgiving week. Yay. And hey, Lori, Carrie, nice to see you. Welcome, Yomi, Shayla, Tunde. Am I saying that right? Tom, Solomon. I have my husband Brian here. He's off camera. He's on the phone here. Oh, there you go, Steve. You got it to work.
Yep.
All right.
Can you see it okay?
Keep it there. I'm going to stop your share. So then you have to stop sharing. There you go. No, it's a tricky thing. So, lots of vegetables. Hey, and from New Jersey. Oh my gosh, very cool. Pecan pie, yes. You know, I'll just tell you all mine. Carrie's from Frisco. I'm here in Frisco. I am a pumpkin pie. Very much your favorite.
Stuffing.
He likes the stuffing. And we have dressing because I know different people do different things with their stuffing. Like some people put mushrooms in it. You don't like the mushroom kind. Yeah. Usually gets the Pepperidge Farm. So all right, everybody. Well, we're gonna go ahead. I'm sure people will join us, but it's like 6:35, and so we got a lot of stuff to go over tonight. So first off, welcome, and as people join, all the sweets. Okay, all right, Tom. Yay! So this week was let's see, what is today? Monday. So we got Thanksgiving just around the corner, and then oh my gosh, 4 weeks from now, Christmas. So. And I had been asked to do a couple presentations this last week, and I sent a link out to my YouTube channel, and I wanted to kind of share some things about the market because there are definitely some changes that I've been seeing in the market. So I'm Nancy Wallace Lobbs. I'm a real estate broker here in the great state of Texas. I'm a public speaker. I teach strategic and creative financing options for real estate investors. I have an online academy, and I do a lot of public speaking and podcasts. So last week, I was fortunate enough to go and do a presentation on the changing market, and I did a YouTube video about it. But I kind of wanted to hit on the highlights because I think as real estate investors, I'm assuming that's why you're all here because you're interested in some kind of investing. And we're going to get to Steve, our guest speaker, but I wanted to share a couple things that I'm seeing in the market that I've found was maybe useful to you guys too. So let's see, one participant share. Here we go. So what I noticed this week, so can everybody see my screen? Let's just see, can you show me like just a yay? You should see changes in the market. Hopefully, can y'all see that? Yeah, is that a yes? Okay. So, I mean, it doesn't take a lot of rocket scientists to say, okay, the interest rates are going up, right? When I did this presentation, this is a very shortened version of the presentation I did last week, but basically the interest rates are going up, and no, I don't have a crystal ball to see where they're going up in 2023, but I don't see them coming down. So what this is doing is it's having people aren't running out and buying the houses. So here in Texas, like if you put a house on the market, boom, in hours it was gone with multiple offers. Well, we're seeing that shift. It's not happening. So as I was putting these numbers together, I was looking at now the places that I get the data, they're a little bit behind. So, I don't have like from July to October, but just in Texas, there was we started to see a decline by 5% in April through June, and then they've been coming down. The days on market mean how long a house is sitting on the market, how many days does it take before it sells. So prior to just maybe even 6-7 months ago, one day houses were just flying. I mean, I saw things on Facebook that houses were literally on the market for just hours. So now that's increased to 42. However, I was actually meeting with a seller a couple of weeks ago, and the comps that I was doing in an area in Plano, in this particular subdivision, now the subdivision market creeped up to like 75, right? So what does that mean? Well, the longer it takes for a house to sell, the more the buyer can wait out and negotiate the price. So now there's increased inventory. So basically, what we were doing as investors even 6-8 months ago is not going to work today in this market. Now, just to give you even more perspective on that, so in July of 2021, there were a little over 55,000 houses listed for sale, right, on the MLS. Then you fast forward to July 2022, and it jumped up to 83,000. Okay, so that's an increase of more than 50%. So that's good news, right? So when you see higher interest rates, that actually triggers and should make you think as an investor, okay, there's going to be some opportunity coming up, and this is what's going to happen. Not only that, 36.1% of the listings had a price decrease. So what does that mean? Well, now sellers aren't going to be getting all the money that that they were accustomed, 10, 20, 30, 40, $50,000. And rents have increased 13.5% to 21%. Now the data I'm sharing with you just has to do with North Texas, so just a tiny fragment of the whole United States. But you can see the pattern starting to happen, right? So what does that mean as far as opportunity for investors? Well, you know what? There's some tired landlords out there, guys. The eviction moratorium, pandemic, so the eviction moratorium, just to give you an idea, right? So Dallas County, they don't have the eviction moratorium, but what they did is they made it really a lot harder to get the tenants out, right? So what they did is it used to be that you would just give the 3-day notice and then you could go in and file, for eviction. Now Dallas County literally put in place that now you have to give 21 days notice and the tenant can, respond. I mean, so and if you don't do that one step, then you're gonna have to start all over. But just to give you an idea of how tired landlords are, now remember during the pandemic, tenants didn't have to pay, they could apply for funding, not the landlord. So there were, in just this last September alone, over 4,000 evictions filed. That's just in Dallas County. That was the highest month in 5 years. So, there's landlords out there that are probably going to be interested in selling their property. Maybe the tenants damaged it. We talked about the days on market already. From September, it's up to 42 days and it's growing. Expired listings. This is like I put my house on the market and it just didn't sell. So if you have access to the MLS or you have access to a realtor, I actually market to expired listings because they wanted to sell, and for some reason they didn't. Right now, foreclosure. Now they started to, the eviction, the forbearance. I guess not the eviction protection or whatever, but now what's happening is that the foreclosures, they're starting to, go up. So there were 4,700 filed, and it was triple from 2021, which in 2021, there couldn't be foreclosures, right? So now what you're seeing is people that maybe took the forbearance, and the way the forbearance works, if you're not familiar, is if I took the forbearance in my home, it means I didn't have to pay, let's say for, 4, 5, 6 months. But all of that money is tacked on at the end, and then I have to come up with either a big payment. But now what's happening is people aren't able to do that. And then, guys, so we're talking about opportunity. So the economy is not, it's kind of scary if you think about it. Interest rates, prices are really high. But from real estate investing standpoint, there's opportunity for you, and this is how, you know, you look at it. Now, I put on probate here because no matter what, people pass away regardless of what the economy is doing, right? And I have great success with marketing to pre-probate, which is like they have not gone in. So there's always people who want to sell their home in the probate. What is that? Okay, so what I want to do is just talk a little bit to you about focusing on investing strategies. So during recession, so this is kind of like how can you protect yourself about what is happening in the, how you can still invest, how you can protect your rental portfolio, what, you know, if you've already invested, you know, and then the shift that you should go to. So one, you want to maximize cash flow. Cash flow is king now, so you have to be focusing on strategies that you know, like if you bought rental properties and, you know, maybe you paid a little bit more because you could. Well, now with the recession, you want to make sure that you're not negative on your rentals, you know, like even $100. You want to maximize cash flow. You want to reduce your bad debt. So bad debt being your credit cards, you know, maybe you don't need the third car, but really kind of, you know, looking at your budgeting and seeing what you can do to kind of increase your own cash flow, right? Look about diversifying your assets. So one of the things our guest speaker tonight is we're talking about, you know, oil and gas investments. So I'm a real estate investor, you know, but I'm looking at different assets and I'm not saying that you should, I'm saying you should diversify whether it's rentals, short-term rentals, owner finance, that kind of thing. Avoid speculation on deals. So this has to do what I feel like maybe like land deals. Like there's a lot of people trying to buy up land, which is great, with the idea that it's being developed. So development takes a lot of cash, a lot of time. So, you know, you just want to make sure you're always doing your due diligence. And then the other thing is that, you know, one strategy, if you're looking for financing, is to leverage equity in your properties. Like, you know, instead of taking a credit card, you know, loan, you know, if you have a rental property, you know, this money, let's say I was talking to someone, they have a house and it's completely paid off. Well, if they want to get and buy properties now, what they might, this is their primary residence. So they wanted to, you know, capitalize on the equity that they had in their house so that they could go and buy properties. Again, you have to look at your own strategy. So at the end of the day, everyone, regardless of what the economy is doing, everyone needs a place to live. So if investors just focus on strategies that provide that solution in this market, you're going to do pretty good. So rentals, both multifamily, single family, are going to be a great investment because people are always going to need a place to live, and rents have gone up, as I mentioned. Owner finance is a great investing strategy. You know, you're able to provide housing. You know, you're able to cash flow. You know, this was a more passive. Student housing, now that the pandemic is over, so to speak, you know, kids are going back to college. So investing in and around universities is going to be a good play. Purchasing properties subject to the existing mortgage. You know, so if you're talking with a seller and, you know, they've got like a 2.25 interest rate on their mortgage, you know, that would be good for you to take that property subject to. And then private money lenders. So you know what? In this kind of environment, the one recession-proof investing strategy is become a private money lender, because as credit tightens up, you know, it's going to be harder and harder to get it from the lending institutions. So, so this is my personal opinion. What to invest in real estate during a recession? So the best investments during a recession is residential properties. Housing always has a demand, no matter what. Buy it right, do your due diligence, and focus on obtaining cash flow. So those were kind of my 2 steps. Now, here's my contact info. I'm pretty sure everybody's got my contact info. If you have not followed me yet on YouTube, go out there and give me a follow and a like. You know, it always helps a gal out. And if you have any questions, you know, just shoot me an email. So, so with that being said, I'm going to get out of here. And before we get to our next presentation, okay, let me see if I'm like getting out of here now. get to this stuff here. Did that generate any questions for anybody? I'm gonna go I'll go into the chat. Or did anybody have any questions about that? I mean, after the presentation, we'll have a few minutes I can stick on too, but I love vegetables. Everybody's like, Aubrey, but no one knows what this is. So Aubrey, so okay, no questions. It just, you guys just no questions about what you should be investing in right now. Who is investing right now? Can you talk about that? Yeah. Investing? I guess I answered all their questions. So, yeah. Okay, well, are you guys ready to find out about oil? While I'm going to introduce Steve, what I'm going to do also is I wanted to kind of like this real estate community, we launched in October, so yay. And we have 71 members in the group. So I'll show you 71, and then there's another 20 that's been another on my academy. So if anybody has any suggestions about how to get more people, that would be great. Our next meeting in December, we will be having a Christmas drawing for people. But I really would like some feedback about the kinds of topics that you'd like to have in the future. In December, we are going to have a guest speaker from my favorite probates, and we're going to be talking about using probates. And she's going to talk about, she's a representative from foreclosuredaily.com, and I use them where I buy lists and things like that. So, it would really help me to find out how we could use this real estate community to help you start investing, continue investing, networking and things like that. And if you don't want to say in the chat, just send me a message, in the chat. You can just click on the chat and you can just send it right to me. And if I even say that, you don't have to say, I won't say.
You have a question on the chat?
What?
I do have a question on the chat.
Yes. In the chat. Okay. For some with low capital for investment, will be the best strategy. Okay, so you're talking like little to no money, I'm guessing, yes, right?
Yes, because I'm new to because I already have a house, right? And the house is not up to a year yet. So I was trying to go into investment path, and now they're asking that I have to pay 25%. So if you don't have that amount, so what do you think should be the best strategy?
So is this a homestead that you're buying, or is it an investment property?
So regardless of whichever one I'm going to, it's still going to be investment because I already have a residential already for myself.
Okay.
Yeah.
So it's about the down. Well, okay. So a couple of things. So one, if you go with traditional lenders, now if you already own your homestead, right, and you're trying to buy an investment property, usually an actual investment is going to be anywhere from 15 to 20% down. Now, I like asset-based lenders. So these lenders take the property into consideration. So what that means is they look at how much, so you're buying a property, and if it's, even if it's distressed, and they look at the value of the property, and then they look at, what amount you're going to need. Now, no lender will give you 100% on a property. So if you're trying to buy an investment property, I don't know of a lender that would do that. And even as a private money lender, I wouldn't do that because, there would be nothing to foreclose them if I had to. However, what you could do if you have little to no capital is you could partner with other people. You could do a joint venture agreement with someone that does have money. So you could partner that way. You can develop private money lenders and even partner with them. So if you don't have depending on what you're going to do with the property, you could use a hard money lender depending on how much money you need, but to actually acquire the property. So let's say is it a distressed property? Does it have a lot of repairs?
Repeat that last part again.
Yeah, does the house that you're trying to buy, does it have a lot of repairs that need to be done?
No, it
Okay,
doesn't.
so okay. And are you trying to go through a traditional lender? Meaning like Chase or Fargo?
That I don't know because I just reached out to a lender. I think that was I met a lender out there when I was trying to get it, and that was what they quote for me, but I didn't bother to go through because of the asking and down payment.
Okay, so do you have the house under contract right this minute?
No. So I was just trying to get pre-approval so that I can know what next to do and everything.
Okay, so yes, getting pre-approved would be, so you do, okay, so a couple of things for you. Number one, it's really kind of hard to say, without knowing all the numbers on the property, if it's even a good deal, right? So sometimes when you need to purchase a property, you might have to use either private money lenders or hard money lenders to actually get the property. And if there's equity in the property, and once you fix it up or get it rented or whatever, you can refinance it out to pay them out. But if you're asking me straight up, let's say you're, looking at a property that costs $200,000, and you're paying, the $200,000. I don't know of a lender, and it's worth $200,000. I don't know of any lenders that would give you $200,000 if that's what you're asking me. So you have to be a little bit more creative with how you're buying the property. So number one, are you buying it right? So you should be, if you're an investor, you should be looking at 70% of ARV. So if that house is worth 200,000, your offer price should be, what is that, like two? Let me do it really quick. I can't do math in my head. So your offer price on that house would only be 140, right? So you got a lot of equity in it. If it needs repairs, so the formula for investors is ARV after repair value. So what's the full value of the home minus, times 70% minus the repair. So let's just say there were, I don't know, you had to paint carpet and there was 20,000 in that or foundation or whatever. So your maximum offer is only $120,000. Okay, I know I'm kind of throwing those numbers out there. So what I'm trying to get at is that there are ways to get that money, but if you're asking me, I'm paying retail, I'm paying the seller what they want, there's no equity left. That is very difficult to do with a lender. Does that kind of clarify that for you?
Yes, that does because I didn't know more of all of this information then. So yeah.
So yeah, you never want to pay retail. Even when I have houses off of the MLS, the multiple listing service, I don't pay retail. So look for those distressed properties, and that's why next month we're going to be talking more about distressed properties. So, all right. If there's no other questions, did you want to say something, Brian?
Well, no, I mean, there's two kinds of distress. There's a distressed seller and there's a distressed property that physically needs work.
Yes, so that's a very good point. So a distressed seller is someone who's in a position that has to sell the property. Maybe the property's good, but they need to sell it because they can't afford the property taxes, or that's why I like probate, because they usually have to sell the property. And then the distressed property is a property that needs usually needs a lot of repairs. So, and then in that case, there are different ways that you can buy it with hard money lenders and private money lenders. So, all righty. So I have a quick, what we're going to do next is I'm going to get Steve's. So we decided, Steve, I'm going to get your slideshow up here, right? Yes.
I can.
Oh, you got yours. Okay. So I'm going to, let's see, go here. So we're trying to figure out all this technical stuff. And there he goes. You got it, right?
Yeah.
So, I'm very excited. I can see it. Everybody can see Steve's. So I'm very excited tonight. So my husband and I were at the Quest Expo at the end of September. We were sponsors there, and I was on a panel. And across the hall was another sponsor that someone said, oh, you should go talk to these guys. And so we actually did go talk to them. And, I've been investing in real estate for over 15 years, and I've, never really even looked at anything else. And so I met Steve, and he had a gal with him named Ann. And Steve is the vice president, right? The senior vice president. And I've been calling it King Oil, but it's actually King Operating Corporation. But remember that game, King Oil? I always used to win that. My dad won it. Sorry, I set myself up about that. So anyway, so I talked to Steve about, you know, he went over the presentation with oil and gas. He had an opportunity and everything. And I was like, wow, it's so similar in the terminology and how I would analyze a deal and how I would analyze this deal and everything. So I said, you know what? I didn't know this about oil and gas. And then, and also about how King Operating, if you've had experience in oil investing, you know, there's like a difference with this company. So I asked Steve to come in and give us a presentation. And Steve, I'm going to turn it over to you. So welcome. Let's give him a round of applause. Yay!
Thank you, Nancy. And first, I want to start by wishing all of you an abundance of joy and love this Thanksgiving, and just really appreciate you being with us tonight and listening to our story. Can everybody see the screen okay? Are the slides appearing okay?
I can see them, Steve. So
Yes, they are.
Okay, good. Okay, so we have 20 minutes, and I am going to be very respectful of your time this evening, and I'm going to focus on the key points of this investment, and I'm sure there'll be additional questions, and I just want to offer our resources to all of you. If you do have additional questions beyond the slide deck, I invite you to call our office. Nancy has all of our contact information, and we will be here to help you walk through this and help you make a decision. So this is a domestic oil and gas investment, emphasis on domestic. Everything we do in this fund is based in the United States, and more particularly in 5 states. And I am trying to get my slides to move.
oh, you know what, Steve, hit your either arrow or the enter key.
Okay. Well,
No.
there we go.
Yeah, there you go.
Okay, so
That's like too much.
yeah, so I'm going to move from this slide very quickly, but I do want to comment on this slide. We are going to talk about risk, and that's what this slide is all about. As I go through the presentation, I'm going to mention the elephant in the room. Everybody who inquires about this investment asks, what is the primary risk? And I'm definitely going to cover those risks as we go through the slide. So an overview of the presentation. This is a 3 to 5 year investment. And at the end of 5 years, our goal is to have a partnership that's worth $915 million. And we're going to demonstrate to you how we're going to get to that point. Essentially, we're going to acquire, develop, and divest. This should sound very familiar to all of you on the call. This is a real estate model, and it is the only hybrid real estate model available in the oil and gas space today. The 3 benefits of investing with us are the significant tax savings, the monthly passive income, and the 3x multiple upon exit. The timeline. So a question always comes up about how long will I be in this investment? Again, the answer is 3 to 5 years. So if I can call your attention to the bottom part of this slide, We have already acquired the leases. We're already raising capital. We've already raised about $8 million in the first 3 weeks. This is a brand new fund, folks, but we're already at the $8 million mark after 3 weeks. So, as the timeline indicates, we're getting to the stage where we're going to start drilling. Just a couple of comments about nomenclature. As we go through these slides and as you visit with our representatives here, you're going to hear two terms that I need to speak about. One is PDP and the other is PUD. PDP stands for Proven Developed Producing Wells. PUD is Proven Undeveloped Wells. These are significant terms in that we're going to be drilling 21 proven producing wells, and we're also going to be developing about 40 properties that don't have any production but bring value to the partnership. More on that in a minute. But again, back to the bottom of the screen, just understand that we're in the fourth quarter of 2022. We're starting to drill. By March of next year, the monthly income will start. And then of significant importance is by summer of 2023, we'll open the divestiture window and actually start selling some of these assets. And I just want to make sure you understand that is the most unique feature of this investment. Most oil and gas investments do not allow you to participate in the equity value of the assets. Here, you are an equity owner, and when we start divesting of the assets, you will receive net proceeds. This is probably the most comprehensive slide of the entire presentation. It just summarizes the three benefits of investing with us, and I'll go over that one more time. So this time of the year, it's essential to understand the tax benefits of investing in oil and gas. And by the way, this is going to be the last year that we have the rich tax benefits that we've enjoyed since 1984. Those benefits will start to dwindle next year, actually January 2nd of next year. But if you invest this year, you actually will take advantage of the 100% write-off capabilities, again, that we've had since 1984, thanks to President Ronald Reagan. The monthly passive income. So keep in mind, we're just now starting to drill. These wells will start coming on stream in the spring. And by late summer, the development should be pretty much mature. You are going to realize a variance in income. The income's going to start out a little bit on the low side, and then as more wells are drilled and come on stream, then that's when you're going to see the IRR closer to the 20% range. So if you invest, if you purchase a full unit, if you invest $200,000 in this partnership, what this slide is indicating is your monthly check should range somewhere between $2,300 and $3,500 per month. Now, the caveat is we can control a lot of things in this partnership. We have no control over the pricing of commodities. These numbers are predicated on oil being $80 a barrel and natural gas being $6 a foot. Just for discussion purposes, oil today is about $82 and natural gas is close to $7. And then finally, the multiple at the end. You invest $200,000, you should walk away in 5 years with $629,000 or a greater than a 3x multiple on your investment. I'm not going to spend a lot of time on this slide. Just understand we do everything we can to mitigate risk. One of the ways we mitigate risk is you have a product blend. This is a blend of both oil and natural gas. Another way we mitigate risk is we spread out geographically. So the two primary locations of the drill sites, we're going to be developing natural gas wells in Wyoming and oil wells in the Permian Basin. We have under lease right now 36,000 total acres. Again, I mentioned the whole goal in this partnership is to drill at least 21 wells and to have at least 40 undeveloped locations that our buyer will be interested in buying. Going back to, and this is a lot of numbers, I apologize for the busyness of the slide, but going back to what I was saying about the Permian Basin. So we'll have 12 wells. These are oil wells in the Permian Basin, 9 predominantly natural gas wells in the Bighorn, which is in Wyoming. Comment on the to be determined line. We are looking for a third location. We are in negotiations for some property in the Permian Basin and more on that to follow. But right now we do have 21 sites ready to go. If you're wondering about that, the value of that undeveloped piece. So once these wells are drilled, those drilled wells, those producing wells will be worth about $732 million. There'll be another $183 million in value brought just because we have undeveloped locations nearby, proven production, they just haven't been drilled yet. So you add the undeveloped value to the developed value, you have a total partnership value of $915 million. Let's go back to the tax savings just a moment, because again, this time of the year, this is one of the key advantages of looking at oil and gas. So an easy way to remember the tax benefit is whatever you plan to invest, just take 30% of that, and ultimately that will be your tax benefit. So here we show a $200,000 investment, which is a full unit. You take 30% of 200,000, your estimated tax savings is about $60,000. People always ask, what's your minimum investment? Because you're coming through Nancy's company, we can offer you a $50,000 minimum investment. That's usually not the case. If you came direct and did not go through Nancy, that number would be 100,000. But because you're a part of Nancy's syndication, we can offer you a $50,000 minimum investment.
Yeah, just a clarification there, Steve. They're just part of the group, not because I'm not syndicating any money or anything. So just want to clarify that for everybody.
Sure. Yeah, thank you.
Well, just kind of what Steve, if you don't mind me jumping in here, just
Sure.
I did invest in this, and for those, I don't know who you don't know about this, but I was like, okay, well, what about this? And we had many conversations, didn't we, Steve, and answered all the questions. So the sole purpose is just information here for you guys.
Yep.
But yes, if it's something that you even want to talk to me about, just shoot me an email or whatever. But yeah, we ended up, one of the biggest, the two things that kind of got for my husband and I was, one, the number of wells that their King operating company is actually drilling, and they're on private land. So they're not, on any government timetable, if you will. And number two was the tax savings. So as investors, earlier this year, I sold a couple properties, and I did not want to 1031 exchange them because I didn't want to be forced into buying something that, at the time that I sold, I was gonna have, the prices were crazy on houses. So I actually had a conversation with my CPA. And so for us, the tax advantage was really primo. So sorry, Steve, for jumping in there. I just wanted
No,
to
no.
try that about the syndication.
Oh, and I'm sorry for using that word.
No worries.
That was not an accurate statement, so I apologize for that. So moving along, so splits. This is important, folks. So people ask, well, what percent of the ownership is on the partnership side? What percent is on the operator side? As this dollar bill, this is supposed to be a dollar bill, as this dollar bill will illustrate, the investors own 80% of this partnership. King, the operator, owns 20%. That is exactly how your monthly income is calculated. So as we produce and sell sell barrels of oil every month, 80% of that revenue goes to our investors, 20% is kept by the operator. Now, the other split that you need to know about is when we liquidate the assets, when we start selling our leasehold interest and our wells, that split is 60-40. So 60% goes to the investors and 40% goes to the operator on what we call the back end. So it's 80-20 on the monthly income and 60-40 on the back end divestiture. Tons of numbers here, not going to bore you. Just understand that the whole idea in this partnership is over the next 18 months, we want to return your principal investment. So if you bought a full unit, the goal is on a monthly basis, we want to return that 200,000 to you within 18 months. And then the 429,000 will be what you realize from the divestiture of the leasehold interest and the wells, the assets. You might wonder, so what makes us so confident that we can sell these assets in 3 to 5 years and to get that, that $429,000 gain? Well, it's all based on comps. Just like most of you on the call, we're in the real estate business too. And so here are just a couple of comps, recent comps that we use to establish that $429,000 exit strategy. A little bit about who we are. Nancy had asked me in this presentation to cover 3 things. First of all, why oil and gas? Secondly, why now? And thirdly, why King? I'm going to kind of do this in reverse order. I'm going to talk about why King at this point. The top 4 gentlemen have 116 years of experience in the oil and gas industry. Our founder, Jay Young, is a 4th generation oil man. The Young family has been in the oil and gas business over 150 years. Our company is 26 years old. We've been in the same building for 23 years. So there's a lot of stability involved here at King. And I think, the biggest answer, the most predominant answer I can give you is we're the only sponsor offering you a real estate model. So that would be my short answer to why King. Let's go to why oil and gas. So I won't bore you with numbers, but suffice it to say, right now, the United States is consuming about 23 million barrels of oil a day. We're producing about 20 million. You probably know OPEC back in October cut production by 2 million barrels of oil a day. So what I'm simply submitting to you is The demand situation is very bullish for 2023. Most of the pundits who follow the pricing of oil and gas believe that oil will be well over $100 as we go into 2023. Again, today it closed at $82 a barrel. And why now? I mentioned the tax savings. And again, those tax savings are going to be reduced in the first quarter of next year. They will start going down incrementally over the next 5 years. The other reason you would want to consider this investment is, as Nancy mentioned earlier, real estate softened up a little bit. Rising interest rates have dampened that growth trend. You look at the equity markets, the NASDAQ is down 34% year to date. The Dow's down 19. Look at corporate bonds, they're down roughly 12% year to date. So the landscape for investments is dotted with some rather unappealing choices. And as you look at oil and gas and look at the demand profile going into 2023, we think this is an asset class that deserves a lot of your attention. So how do you invest? And we'll just wrap up with this slide. You first decide what you want to invest. We can take as little as 50,000 or as much as $1 million. Anything over $1 million requires approval from upper management. Once you decide how much you want to invest, we then generate a DocuSign form. I'm guessing most of you are familiar with that. You sign the DocuSign form, wire the funds, and we welcome you to the partnership. Last thing I'll say about your membership in this partnership is you will be inundated with communication. I always tell people if it's a little too much, let me know. Let anybody here know, and we'll dial it back. But we do send out newsletters. We send out all kinds of notifications on a regular basis. And again, if it's a little too much, we will certainly back off. With that, Nancy, I'm just going to turn it back over to the audience and questions, comments.
All righty. Thank you so much, Steve. If you'll go ahead and unshare your screen.
Yep.
Yeah. And while we have a few more minutes. What I'm going to do too, guys, is as I said in the beginning, I'm really trying to get a handle on, making this real estate community for, real estate investors or, information. So I sent out a poll. So if you could all just take a couple minutes and just give me some feedback there. And then in the comments, number one, if you have a topic, a burning topic that you would like for me to cover over, especially as we're gearing down, we already have we're going to talk about kind of marketing to probate and pre-probate in December. But moving forward, as I plan the January, the February, the March, what topics would you like to have in the future? Like what would help you in your, in your life, in your business? What do you need to be successful? What are your goals? Are you looking for long-term rentals? Are you looking for short-term rentals? Combination of both? Are you looking at owner finance? How can I support and help you get the information? So my goal is to get you the education, at least put it out there, get the speakers and whatnot. I don't know everything. I do know a lot of people. So anyway, Steve, thank you so much. I'm going to check does anybody have any questions for Steve? I know it was a lot. And Steve, I think I'm just going to kind of talk about my experience, if you don't mind.
Absolutely.
Or see if anybody's got any other doing the poll and whatnot. So one, I had a lot of questions because I always have a lot of questions. And my husband and I really, we kind of were like at that particular time. We just, on the real estate market, we know it's going to change. So in 2023, we're looking forward to investing in property, but in the meantime, I like to shelter, in one of my presentations, I said, how many people like to pay taxes? Well, nobody, property taxes are coming at the end of the month here in Texas. No one likes to pay more taxes than they have to, right? So that was kind of a really good thing for us. And then, I also reached out to like my CPA, who had actually done a lot of oil and gas in the day. And so one of the things that he mentioned was, because they're drilling multiple wells, and you're not just relying on everything, from this one well. So I liked that prospect. I liked the model. Steve was very patient with us. We asked him questions, and especially after we got the PPM and all of that kind of stuff. But he's very knowledgeable. And really, I think, what else, Brian? Do you have any thoughts about that? I'm getting my, better half here to talk about the oil and gas thing that we did and why we did it. This is Brian. This is my husband, Brian. He doesn't like to get on camera very much, but I'm like making him, so.
Hi, and good evening to everybody. Just overall, the experience of working with Steve, the diversity of work, the opportunity to diversify our portfolio, I think was one of the reasons that we did it. And looking at things other than real estate, although real estate is our primary go-to, there was intrigue in it for me because it's a chance to learn something new. And reading and going through the PPM was an educational experience in itself, and could be kind of tedious, but I like the tax advantages of it, definitely. And the real estate model of the ADD, if Steve went through that with you, was definitely an interesting model that I had never even heard of in the oil business before. It was, let's sink a well and hope that it's, spring some oil. So really enjoyed the conversations that we had with Steve.
Yeah, and also we were looking for a passive investment. So this was just to let you know, like, to be transparent, that we're not y'all have to do your own due diligence or anything, but it was kind of an educational journey for us. We were looking for a more passive way of investing at this particular point. And the tax advantages, right? So that's what we were kind of looking for. And it's all about diversification, about kind of looking at the market, and a little bit of risk. I mean, so what we're doing is what I like to say, we're minimizing our risk. There's a word for that, though, minimizing your risk. But anyway, so we looked at everything, and it was the right investment for you. It might not be the right investment for you guys, and I would definitely do your own due diligence. But again, if you want to reach out to King Operating Company and talk with Steve, Steve, you know what, you should put your phone number in the chat for everybody. Yes. Did you do that?
Yep.
Okay. Okay, I hope everybody took time to do my poll. Yay, thank you. It helps me to have a better meeting for you. And if you would be so kind as maybe to put in the chat, and if you don't want to say it for everybody on here, if you have ideas for a topic and for 2023, where do you think things are going, right? So we have like 5 minutes left, so let me hear from you guys. And like I'm with Steve, like I hope everyone has a wonderful Thanksgiving. The kids are out, right? So isn't this the first Thanksgiving since the pandemic? So we have a lot to be grateful for. So, well, let me see. Anything else in the chat here? Nope. Okay, guys. Well, I hope you have all a very happy one. Thank you so much for coming tonight. Really appreciate it. Steve, a special thank you for you. for coming out, and everyone stay safe, and happy Thanksgiving.
I know.
Bye.
Thank you.